I'm here with Curt Hall of First Home Mortgage this morning, and we're going to be talking about when it's appropriate to refinance your loan. As most of us have heard recently, interest rates are low, so I wanted to talk to the expert, Mr. Curt Hall here at First Home Mortgage, to find out when it's a good time to refinance and just kind of revisit some of the steps necessary in the processes of refinancing your current mortgage. Is now a good time to refinance for people?
Well, it's truly, any time is really a good time. Whether rates are high or low, it all depends on the individual's circumstance, really. Depending on what their ultimate goal is. The interest rates are very low, so if you're looking to lower your payment and lower your rate, now would be a great time. If you're looking to consolidate debt, take some cash out for home improvements, I think it's a wonderful opportunity to refinance.
You had mentioned two different reasons why people may want to refinance right now, with one of them being taking advantage of the low interest rates right now. If you're looking to lower your monthly payment per month and increase your overall cash flow, that may be one reason to refinance. And you also mentioned cashing out. So if somebody needed some cash right now, it may be an opportunity to cash out on some of the equity gain that you've made in your property.
Absolutely, absolutely. Taking cash out in general, which is what's gotten a lot of people in trouble in the past, is that they've taken equity out or cash, spend it on depreciating items, things that really didn't bring any more value to the house. But if you're consolidating debt, which would increase your monthly cash flow, and lower your debt, and possibly rolling some of that debt into a tax-deductible item via the mortgage instrument, then it makes sense.
Those both sound awesome. Let's talk about the downside. What are the costs?
Well, there's a couple questions that the individual really needs to know. Is one, what is what I refer to as the hard cost? What is it going to cost me to do this transaction? This would involve, there's going to be appraisals, there's going to be a credit report, there's possibly points or origination fees, there's going to be recording fees. These are all costs that you're incurring to actually do the transaction. Now, these costs can range anywhere from, I've seen them as probably down around maybe a couple $1,000s, and if you've got points involved, I mean, they could be upwards of $3,000 or $4,000 in actual cost to do the transaction. So you have to kind of weigh what these costs are compared to what you're trying to accomplish. Is it lowering your payment and lowering your interest rate, and the cost is $2,000, but you've saved yourself $100 a month? Then the simple math is that you take your $100 savings, divide it into the cost that you incurred, which was the $2,000, so it takes you 20 months to really kind of make that transaction worthwhile. And within this 20 months, if you refinance again or sell your property, dispose of the property, or somehow that loan is paid off, then the refinance may not have been the best option at that point in time.
I like that logic. That makes a lot of sense to me. That's how I like to think about it, as a future investment. And knowing in that situation, for example, if I stay in the property for more than 2 years, I'm saving money every month because I refinanced.
Correct.
So talk to me a little bit more about some of the additional costs. You've mentioned settlement costs and the lender fees when you refinance, and those are anywhere from $2,000 to $4,000 roughly. There's some additional fees. Sometimes there's a penalty, a payoff penalty. Can you talk a little bit more about that?
Yes. In some programs, depending on the loan that they have what they refer to as a prepayment penalty clause in there, which could cost them thousands of dollars on top of the cost that they're incurring to do the transaction. So if we go back to the same example of a $2,000 hard cost, and then all of a sudden there's a prepayment penalty, because a prepayment penalty is when you're paying the current loan off before a certain time frame. Usually they're usually 2 or 3, maybe sometimes even 5-year terms on a prepayment. So if you were to refinance or pay these loans off within those periods of time, the lender can give you a penalty, and sometimes it can amount to a couple of $1,000s. So on top of the $2,000, when you go to closing, you have your current balance plus the $2,000 for the hard costs plus this fee or penalty, and all of a sudden there's additional costs involved. So it may be worthwhile to review what kind of loan that you currently have.
Gotcha.
Those back in about 3 or 4 years ago, those were very popular, where everybody was getting loans left and right, but most of them had some type of little clause in there as a prepayment penalty. So people really need to be careful depending on the type of loan that they had, and they usually can be found in their papers that they, whether it was a refinance or a purchase, and it'll be spelled out on their notes.
Got it. Okay, that's very helpful. So just to reiterate what you had said there, make sure if I got it correctly. The information as to whether a buyer or a homeowner has a prepayment penalty can be found in their note. And that information is going to be found in that nice thick folder they received when they originally purchased the property.
That's absolutely correct. It's not just the first mortgage. It can happen on your equity lines, too, if they were newly, if you've opened them up with probably in the last 2 or 3 years. And so you want to make sure that you don't get caught in that arena, too, because the second mortgage or the equity lines can also have that type of clause.
Right, and when you're talking about settlement costs between $2,000 and $4,000, that's the settlement cost and the lender fees only. If you were to add on top of that as much as $2,000, $3,000, that almost doubles your cost to refinance your loan. So that's something important for people to research before deciding to refinance.